About a year ago, some of you saw a video of me walking through Shenzhen. China had just opened and I was talking about 3 main points that NIO needs to improve in order to win back investors and to gain trust. So these points have been about the hybrid solid state 150 kWh battery, about the rollout of NAD or autonomous driving as a paid subscription service, and last but not least, of course, about the sales. Now we're 1 year later, and in this video I want to talk about why the stock has not moved on since then, although in my opinion NIO has addressed all of those 3 matters and actually delivered on them. Firstly, the 150 kWh battery packs are now being rolled out after a very public live stream of the NIO CEO, making a real-world scenario of more than 1,000 kilometers driving. So it's 1 year of delay. However, this new technology is being rolled out through a unique way. You can swap it into any NIO that has been bought since ever, because all of them are compatible and it's the latest tech NIO has delivered. Moving on to the next point, NAD hasn't rolled out, but there's something similar. NOP plus beta is now making its way into the hands of consumers in the form of software updates. Now it's being rolled out into cities, whereas during my previous visits to China I was able to use very advanced functionalities on highways such as autonomous overtaking and so on. Now these functionalities have been rolled out into cities, so that means the car takes independent turns, it's steering its way through traffic, and in the future, and that's already been showcased, it will do something like automatic swaps, which of course might be quite handy as a way of replenishing power fast, effective and autonomously in an area where most of the driving can actually be done by the car. But I guess the most important point, especially for nervous retail investors who are watching weekly sales, is that NIO has now started to deliver on deliveries. Basically, the sales numbers have improved. I've shown this chart, which basically has always been going to the right direction on this trend line. However, the 2023 transition for platforms is done and NIO has actually succeeded in the price war so far. Now the 2024 sales are coming in quite stronger, especially compared to competitors, in my opinion. Now, all of this sounds terrific, but why is the stock trading at lower valuations than it has actually 1 year ago, despite now these promises have been actually fulfilled? To answer this, I made a very simplistic view about what are the company fundamentals and the macro environment that we are trading in. And for the company fundamentals, if we're looking back 2019, this has been a time where NIO has actually got year-over-year growth of around 81%. The trend was up, sales have been accelerating, vehicle margins though have been negative, meaning on each car sold, NIO was not earning money, and the bottom line, meaning the net income, was a negative of 1.6 billion for the whole year. The macro environment though was very favorable, like 1% interest rates roundabout. Geopolitics wasn't a topic back then in 2019 before the pandemic really started. The EV car industry though has been in the early stages. This was just when Tesla started to kind of prove that EV can be a thing. The Model 3 was ramping. The stock wasn't doing anything yet though. And China's macroeconomy was rather hot, I would say. Then we had obviously the whole COVID thing, like 2020, when was all of the lockdowns started worldwide, and the sales trajectory though for EVs been particularly strong, and for NIO 113% year-over-year growth, still accelerating. The vehicle margins have improved to flipping actually to 10% positive, 10% and more actually. The bottom line was actually quite good, less than 1 billion in money burned through for the whole year. And most importantly, the US was also slashing interest rates further to 0%. Geopolitics, not a thing. Breakthrough in the EV industry with Tesla, being the big name there. And of course, in China, we had some lockdowns and COVID policies and so on. That was going into 2021. Still good growth year over year for NIO. However, the trend was going to stagnate a little bit, plateauing there. The vehicle margins had reached its height. I think at that time, EVs were benefiting a lot through all of the COVID situation and so on. But the bottom line was up in terms of more money being burned through, 1.6 billion back then. Interest rates favorable still, and the geopolitics have been starting to worsening. So people started to talk about the tech crackdown in China and, a little bit of saber rattling happening there. But you didn't really get that with us in NIO because there was still a lot of hype around EVs. And well, despite the fact that there was COVID going on, China actually had quite a bit of places where there were no lockdowns at all and so on. So not entirely impacted back then. This really started to come later, 2022 and 2023, when COVID really was at the peak in China. I remember the factories being closed for NIO from time to time, and lots of things were showing up now also in the fundamentals of the company. So 30% year-over-year growth only for growth company, that's not enough. The trend was actually decelerating, so that's not what investors like to see. And Vico margin still quite okay, 15-ish%, but cash burn up to 2 billion a year. Interest rates were hiking as fast as they ever been, 3% more or less at that point in time. And geopolitics, unfortunately, with the invasion of Russia into the Ukraine, have been escalating, basically sort of starting a west versus the east sort of thing here. EV cars, though, still getting quite some hype back then. That basically stopped in 2023 when we had still fundamentals deteriorating for NIO. Now also the vehicle margin's been getting lower and lower in this transition year, especially. Lots of cash burn, and interest rates were peaking higher and higher, 4% and more. Still quite a bit of geopolitics and escalatory measures there from the Biden administration, from China and so on. And a price war starting in the EV industry, deflationary prices, price cuts, and so on. So the macro environment also here deteriorated quite a bit, as well as for China. The reopen in 2023, when I was first on the ground again, was quite a bit slower than anticipated for investors. And so now looking forward, we're in 2024. We are currently at a 50% year-over-year trajectory. So this is a recovering, a re-acceleration, if you will. It's definitely higher than in 2023, but we're not sure yet if we get this 50% year-over-year growth. That's just the trend currently. The margins are picking up again. So I think over the year we will see higher than 10%, so double-digit margins for NIO. The cash burn should stay the same pretty much, between 2 to 3 billion, in my opinion. However, on the macros, it's not looking good yet. Still very high interest rate scenario here for the 10-year, which is hurting non-profitable businesses like NIO. And for the geopolitics, I would say we have a little bit of a moderation here now, a wait-and-see scenario in which we've seen China basically neutral in a conflict with Ukraine and trying to open up again, so visa-free agreements for Europeans and so on, though the US still not impressed and they want to still keep on this battle ongoing. But I will tell you in a minute where I think this will be going. For the EV industry, we're now starting this consolidation phase in which the first startups are going bankrupt and belly up, and we're seeing kind of a re-acceleration for the Chinese macro factors here for the economy, although it's still a bit soft. However, the numbers are largely pointing into the right direction. It's not hot yet, it's not accelerating really, however it's starting to show. And I think going into 2025, that's something which we might still see continuing for the economy there, but for the company fundamentals like NIO, I think we might see over 50% year-over-year growth, hopefully, ideally. That is because we will see the sub-brands with Onvo possibly making a bit of a bigger dent into the 2025 numbers. Onvo being launched, possibly more going towards 2026, where we also hopefully see the more than 50% year-over-year growth again. And most importantly, that's why it's green here, higher than 15% vehicle margins. That's what management guided towards. We'll see, obviously, if they can meet those targets this time. However, currently it's looking into the improvements are going the right way. In my opinion, in 2025, it might be the first time that we will see the net income improving. However, the interest rates will still not favor us. Currently, there is this higher for longer kind of market expectation. There might be some cuts. Maybe it's stagnating where we are. Although I have to point out there are also people in the views that we need even higher rates. So that could definitely be happening as well. That's why I put it for 2026, a 3 to 5% corridor for the interest rates for the 10-year. Who knows what's going to happen? We might see cuts, but we might see it's just sticking like this. Overall, this macro factor is not great for a growth stock like NIO, because it basically means that more future out cash flows won't be getting discounted as much into the present net value of the stock. So that's kind of a thing that will be different in the future from 2019, 2020, in my opinion. But I'm making the case here that I think the geopolitics will likely be improving 2025, 2026 forward, maybe with the new administration in the US. I think this whole conflict will possibly start to fade at some point in time, although the other way would obviously be a total escalation. That would mean World War III, and that has never been part of my investment case, because basically then we are all screwed. So I'm looking at a positive case here. I'm hoping, a peaceful coexistence. I'm not asking for more, but that's what I think might be realistic. And on the Chinese side, the acceleration of the economy over time. Maybe after the US election, we will see some stimulus by the Chinese economy. And so if we're looking at the stock price and why, despite the fact that the fundamentals have now improved, and I think that they're now delivering on their promises, the stock is still beaten down. We can have a look at those market cycles, which have been in 2019, round about here. There was almost bankruptcy and then some hope that a recovery might be possible with the help of the Hefei local government investment. Then people got really thrilled into 2022 with first of the COVID stimulus and so on, and also the improved fundamentals that are pointed out here. Then we went through euphoria, in which the company's stock was trading around 60 USD during the time when everybody thought NIO will be the second Tesla here, and everybody was trading stocks because everybody's got locked down back home, right? And then going through this whole cycle, the down trajectory here, first denial. We were not accepting that both the fundamentals of the company as well as the macro environments have deteriorated enormously during that time. And for example, we're betting on fast rate cuts or less of a rate cut and so on, and possibly a pickup, with the promises made by NIO that we're gonna get record deliveries in 2023. All of that turned out not to be the case. And so we had this whole thing between anxiety, denial, panic, anger, I would say right now in 2023 with US 8 USD a share. And now we're in this depression phase where people or nobody knows, are we ever going to get out of this? And possibly the next rally will be everybody in disbelief, right? Everybody will think this rally doesn't have any legs. Only then in maybe 2026 when we will possibly see a break even, not only for a quarter, maybe close to the full year break even, or even having that confirmed. Only then people will start believing again. And then maybe the cycle is going to start again, going from hope to optimism and some more thrill, ideally, in the future. In my opinion, the cycle will look a little bit different next time, because the fundamentals of the companies will be much better in this cycle than actually in the cycle before. However, the macro environment will be a little bit weaker in comparison to what it has been before. I just wanted to put this out here to give you something to think about where we currently are, and to hear your comments in the comment section. What do you think about whether or not NIO can actually win back trust of investors, including retail and institutional investors? Last but not least, if you like this video, please smash a like, share it on social media, and consider becoming a member of the channel and help support this channel going forward. Thanks for watching, and see you in my next videos.